Welcome back to Safe Simple Sound. Today's episode is all about exploring the concept of an ideal financial instrument. Imagine a tool that could help you grow and protect your money while offering flexibility, safety, and even tax advantages. Sounds too good to be true, right? Well, we'll be diving deep into this framework from Safe Simple Sound, comparing popular financial tools like 401ks, Roth accounts, savings accounts, and even whole life insurance to see how they stack up against this ideal. I'm excited to have our AI voices bring these insights to life. Let's get started.
Hey everyone, welcome back. Today we're diving into something that really got me thinking. It's this idea of an ideal financial instrument.
Ooh, that sounds interesting.
Yeah, right. We're looking at some articles from Safe Simple Sound, and they've put together this framework for how to think about different financial tools.
Yeah.
And it kind of makes you wonder, what if you could design the perfect way to grow your money and protect it throughout your whole life? What would that even look like?
I think that's a really smart way to look at things. It makes you stop and think about what really matters,
Absolutely.
when it comes to our finances. And Safe Simple Sound, they actually lay out several key attributes they think this ideal instrument would have.
Okay, so spill the beans. What's on the list?
Well, some are pretty obvious,
Okay.
but others might surprise you.
Well, I'm intrigued. Let's start with the basics. What's
Yeah.
the first thing on this financial wish list?
Well, liquidity is huge.
Mhm.
Everyone knows you got to be able to get to your money when you need it.
For sure, for sure.
But the ideal instrument, it takes that a step further. It's not just access, it's immediate access. Like no penalties, no delays, nothing. It's like a financial safety net you can always count on.
That makes total sense. I mean, who hasn't been in a situation where they needed cash quick
Uh,
and regretted locking it up somewhere,
Oh,
you know?
yeah, all the time.
So, okay, we got that. What's next?
Mm.
What else is really important?
Well, safety, of course. And I don't just mean avoiding losses. It's about that feeling of security you get knowing your money's protected no matter what the market's doing.
Yeah, peace of mind is priceless, especially when it comes to our hard-earned money.
Absolutely. So think like high ratings, strong guarantees, that kind of stability that helps you sleep at night.
So we've got access and protection.
Right.
What about actually growing our wealth? That's kind of important too, right?
Yeah, of course. So that's where guaranteed growth comes in.
Okay.
Just imagine knowing your money is steadily growing year after year. Like no worries about market dips or economic crashes, just consistent, predictable returns that build your wealth over time.
Okay, now that sounds really nice. But even if you have amazing growth, wouldn't taxes eat into those gains? That's always a concern for me.
Oh, for sure. And that's why tax advantages are another critical piece of the ideal instrument.
Right.
We're talking deferred accumulation, meaning your money grows faster because it's not being constantly taxed. And ideally, you'd want tax-free distributions when you finally take the money out, too.
Okay, so this is starting to sound pretty utopian. Are there any limits on how much you could put in or take out? That's always a frustration with some accounts I've looked into.
You know what? One of the hallmarks of this ideal instrument is flexibility.
Okay.
No contribution limit, so you can put in as much as you want, whenever you want. And just as importantly, no restrictions on when or how you can access your money. It's all about being in control.
So it's like financial freedom.
Exactly.
I like that. Okay, so what else makes this instrument so, quote-unquote, ideal?
Well, you have to consider that life can throw some curveballs.
Oh, yeah.
So disability protection is huge. Think about a continued funding and growth, even if you become unable to work.
Yeah, that kind of security would be a game changer,
Right.
especially when facing the unexpected.
It's about having that safety net no matter what.
So it sounds like this ideal instrument has that covered. What else?
Yeah.
What else is there?
Well, we often focus on building wealth for ourselves.
Right.
But what about leaving a legacy for our loved ones?
Yeah, that's so important.
The ideal instrument would handle this with probate avoidance. That means your wealth passes directly to your heirs. No legal headaches or delays.
That makes the process so much smoother for your family.
Right. And to make that legacy even bigger, think enhanced death benefit. Your loved ones wouldn't just get what you put in, they'd receive a multiple of the account value. Imagine how much that could help them.
Yeah, that's incredible. It's not just growing wealth, it's making sure it benefits the people we care about most.
Exactly. And to top it all off, picture that inheritance being passed on completely tax-free. Your loved ones get to keep everything you worked so hard to build.
Okay, you've convinced me. This ideal financial instrument sounds amazing, but let's be real. Do any real-world accounts actually come close to this ideal?
Right. That's the big question. And that's what we'll be exploring in this deep dive.
Okay, I like it.
We're going to look at all the usual suspects, 401ks, IRAs, Roth accounts, even things like whole life insurance, savings accounts, and taxable brokerage accounts.
So like holding up each one to this ideal and seeing how it measures up.
Exactly.
Okay, now we're talking.
By comparing them, we can see their strengths and weaknesses more clearly.
That sounds super helpful. Where should we start?
Well, before we jump into specific accounts, I think it's important to remember Safe, Simple, Sound's whole philosophy.
Oh yeah, good point.
They are all about a safe, simple, sound approach to financial planning.
I like that. It reminds us that financial strategies don't need to be super complicated or risky to work.
Yeah, it's about building a solid foundation that you understand and feel comfortable with.
Exactly.
No crazy schemes or anything.
That's a great framework to keep in mind. All right, so let's get started. First up, the 401k. It's kind of the go-to for retirement planning these days, right?
Yeah, a lot of people have them.
So how does it measure up to the ideal?
Well, it has some clear advantages, especially when it comes to taxes.
Okay,
Contributions are often tax deductible, and the money grows tax deferred, just like the ideal. But, there are always trade-offs.
like what? What are some of the downsides?
One of the big ones is the contribution limit. There's a cap on how much you can put in every year. And that's not great for those looking to save aggressively,
Yeah, I could see that being a problem. And what about accessing the money? I know there are penalties if you take it out early, right?
Exactly. With 401k, you're pretty much locked in until retirement. If you try to withdraw before 59 and a half, bam, big penalties. So it's good for taxes, but not so great for liquidity and flexibility.
Okay, so you're trading tax benefits now for less control over your money later.
It's a trade-off.
What about IRAs? How do they compare?
Traditional IRAs are a lot like 401ks.
Okay.
You get the same tax-deductible contributions, tax-deferred growth, and those early withdrawal penalties, too. The main difference is IRAs usually have even lower contribution limits.
So it's like the same idea, but with even tighter restrictions. Okay, what about Roth IRAs and Roth 401ks? Those seem to be getting popular these days. How do they stack up?
Roth accounts are interesting because they kind of flip the script on taxes.
Oh, how so?
Instead of deducting contributions up front, you contribute after-tax dollars. But then when you retire and take withdrawals, they're completely tax-free.
So you delay the gratification, but get a bigger reward later on.
Exactly. And that tax-free part in retirement can be super valuable, especially if you think you'll be in a higher tax bracket then.
Yeah, that makes sense. But are there any downsides to Roth accounts?
Well, like those other retirement accounts, they also have contribution limits and restrictions on early withdrawals.
Ugh, so not ideal in those areas.
Right. So they're great for tax advantages, but not for immediate access or control.
Okay, so it seems like all those retirement accounts have a similar pattern. Good for taxes, but not so great for immediate access. What about a simple savings account? How does that fit in?
Savings accounts, those are like the kings of liquidity and safety.
Yeah, they're easy to use.
Super easy. You can get to your money anytime without penalties, and it's generally insured by the FDIC.
Right, they're pretty reliable. But what about the downsides?
Well, the interest rates are usually super low, like really low, so you're probably not going to see much growth over time.
Yeah, it's like the tortoise, slow and steady, but not winning any races when it comes to growing wealth. What about taxable brokerage accounts? Those are what people use for higher returns, right?
Brokerage accounts definitely have the potential for big growth, but there's more risk too.
Okay, higher risk, higher reward.
Your investments are exposed to market swings, and any gains you make are subject to capital gains taxes.
So it's a bit more hands-on. And you need to be comfortable with some volatility.
For sure.
Okay, so we've covered retirement accounts, savings accounts, and brokerage accounts. What's left? Oh, whole life insurance.
Yes. And this is where things get really interesting. Whole life insurance often gets overlooked as a wealth building tool, but it actually lines up really well with a lot of those ideal attributes.
Really? That's kind of surprising. I usually think of life insurance as protection for loved ones, not for building wealth.
Right. It's a common misconception. But what makes whole life insurance unique is its cash value component.
Okay, I'm listening.
Think of it like a savings account that's built right into your policy.
Interesting.
And that account grows over time. The growth is tax deferred too, so your money compounds even better.
So it's like a secret savings plan that people don't even realize exists. How does that cash value actually work? And how does it connect to those ideal attributes we talked about?
Well, remember, we talked about liquidity, right? Being able to get to your money when you need it. With whole life insurance, you can tap into that cash value through policy loans.
Okay.
No credit checks, no approvals needed, and usually no taxes or penalties as long as your policy's in good standing.
That sounds much better than those retirement accounts with all their rules and restrictions.
Exactly.
Yeah.
And you're borrowing against your own money, so the interest rates on those loans are usually pretty good.
So it's like having your own personal line of credit.
Mm.
That's cool. Okay, so it's got that guaranteed principal and growth, and we see how it offers liquidity too.
Mm.
But what about flexibility? How does whole life insurance stack up there?
Oh, whole life insurance is super flexible. You control how much you contribute to your policy, and there are no rules about when or how you can access your cash value.
That's a big difference compared to those retirement accounts that lock your money up until retirement.
Exactly. You get to decide when you use your money, not some rule.
Okay, I'm liking this.
And you can use those funds for anything: retirement, your kids' education, even starting a business. The sky's the limit.
This is eye-opening for sure. But I know some people say that whole life insurance can be pricey, like more expensive than term life insurance. How do you respond to that?
It's true that whole life premiums are usually higher than term life premiums, but you're comparing apples and oranges there.
How so?
Term life insurance, it's just for protection, like renting an apartment.
Okay.
But whole life insurance is more like owning a home. You build equity and value over time.
So with term insurance, you're just paying for the coverage, but with whole life, you're actually building something.
Right. With whole life, you're making an investment in your future, and that investment can really pay off later.
Okay, that makes a lot of sense. But let's bring it back to safe, simple, sound's core values. Remember, safe, simple, sound. How does whole life insurance fit into that?
Oh, it fits perfectly. First, safe. We've already talked about that: guaranteed principal and growth.
Right. It's like building your financial house on solid ground.
Exactly. It's not going anywhere.
What about simple?
Mm.
Insurance can sometimes feel complicated.
Yeah, that's fair.
How is whole life simple?
Okay, so yeah, there are some details to it, but the basic idea is pretty straightforward. You pay premiums, your cash value grows, and you can access that money when you need it.
So it's like planting a tree. You nurture it with regular contributions, and over time it grows into something valuable.
Exactly.
I like that analogy.
And finally, sound. Whole life insurance, it's built on proven financial principles. It's a strategy that's all about long-term growth and stability, which aligns perfectly with safe, simple, sound's approach.
Okay, I see how it all ties together. We've seen that whole life insurance ticks a lot of the boxes for this ideal financial instrument.
It does.
But how can it actually be used in real life to reach financial goals? That's where the rubber meets the road, right?
Absolutely. And that's what makes whole life insurance so versatile. It can help with all sorts of financial objectives, from supplementing your retirement income to paying for your kids' education, or even creating a legacy for your family.
Wow, it sounds like it could be a part of just about every aspect of financial planning.
Exactly.
Can you give us some examples of how people are actually using whole life insurance to achieve those goals?
Sure. So let's say you're a young professional just starting your career.
Okay.
You might be focused on building a strong financial base and protecting your income. In that case, a whole life policy could be set up to provide a big death benefit if something were to happen, while also building that cash value you can use later for things like a down payment on a house or starting a business.
So it's like a safety net and an investment in your future at the same time.
Exactly. Now, fast forward to when you're getting close to retirement, your focus might shift to having enough income to maintain your lifestyle.
Yeah, that's a big one.
A whole life policy can actually provide a stream of tax-free income through those policy loans.
So it's like a backup plan for your retirement.
Exactly. It can help bridge the gap between your savings and your expenses.
Okay, that's really helpful. And what about leaving a legacy for loved ones?
That's where whole life insurance really shines. You can make sure your beneficiaries get a guaranteed death benefit, which they can use to cover expenses, pay off debts, or even pursue their dreams.
It's comforting to know you can provide for your family even after you're gone.
Absolutely. It takes a lot of stress off everyone's shoulders.
Wow. The possibilities with whole life insurance are really impressive. I'm starting to see how it can be woven into a complete financial plan that lasts a lifetime.
That's the beauty of it. It's not just about death benefits. It's about building wealth, creating security, and making sure your loved ones are taken care of.
This has been an amazing journey into the world of whole life insurance. It's clear it's a powerful tool that can be tailored to all sorts of needs and goals. But before we move on, I'm curious, what are some of the potential downsides? Is there anything we should be aware of?
That's a great question. It's important to remember that whole life insurance isn't a magic bullet. It might not be right for everyone, and there are some things to consider.
Okay, let's talk about those. What are some of the things people should watch out for?
Well, one thing is the cost.
Right, we talked about that earlier.
Whole life premiums are usually higher than term life premiums, so you need to be sure those payments fit into your budget and your overall financial plan.
So make sure it works for you financially.
Exactly. Another thing is that whole life insurance can be a bit more complex.
Oh, how so?
It's got a lot of moving parts and features that can be customized, and that can feel a little overwhelming for some people.
So it's not as simple as opening a savings account or buying a stock.
It can be a little more involved.
Yeah.
You really need to work with a knowledgeable professional who can help you understand everything and create a policy that fits your needs.
It's like hiring a contractor to build your dream home. You wouldn't tackle something that complex without an expert.
Exactly.
Okay. Anything else to consider?
One more thing. Remember how whole life insurance offers guaranteed growth?
Yes.
Well, those returns might not be as high as what you could potentially make in the stock market.
So it's a trade-off. The safety and stability might mean giving up some potential for higher returns.
Right. It's about finding the right balance for you.
This has been incredibly helpful. I feel like I understand whole life insurance so much better now.
I'm glad to hear that.
I know what the potential benefits are and what the drawbacks are.
It's all about having the knowledge to make smart decisions about your financial future.
Exactly. And if any of our listeners are thinking about whole life insurance but still have questions, where should we turn?
Safe. Simple Sound. They're the pros. They can answer your questions, bust any myths you might have heard, and help you figure out if whole life insurance is a good fit for you.
Awesome. They sound like a great resource for anyone looking to build a strong financial future.
They really are.
Well, this has been a fantastic conversation. Thank you for walking us through the world of whole life insurance. It's definitely given me a lot to think about.
Thanks for joining us for this insightful journey into the world of financial tools and strategies. I hope this episode helped you think about what really matters when choosing the right options for your financial goals. Whether it's building wealth, creating security, or leaving a legacy, the ideal financial instrument can be a game changer. If you're curious to learn more or explore how tools like whole life insurance might fit into your plan, reach out to Save Simple Sound. Our team is here to help you build a strong and secure financial future. Until next time, remember to keep it safe, simple, and sound.